Settling tax balances can feel overwhelming, but the IRS Offer and Compromise program offers a potential solution. Under this program, taxpayers can resolve their outstanding liabilities for less than the full amount owed. Paying off tax balances through an OIC involves important steps: determining eligibility, completing the application process with required forms and financial documentation, and selecting a payment option. Let's walk you through each of these steps to help you better understand how the process works and whether it's the right solution for your tax situation. The IRS Offer and Compromise program is designed to help taxpayers who cannot pay their full tax debt due to financial hardship. It allows them to settle for less than what they owe, as long as they meet specific criteria. Eligibility is determined based on your financial condition, including your income, expenses, ability to pay, and asset equity. If you qualify, you can begin the application process, which involves submitting detailed financial information and specific IRS forms. Once your offer is accepted, you'll choose from payment options, such as a lump sum or periodic payment plan. It's important to understand, however, that this program is not for everyone. Applications are thoroughly reviewed, and approval may take time. Additionally, you must stay compliant with future tax obligations. Understanding the details of the IRS Offer and Compromise can help you decide if it's the right choice for resolving your tax debt. Qualifying for an IRS Offer and Compromise can provide significant relief for eligible taxpayers, but the process has strict requirements to ensure it's only granted to those who truly need it. First, all tax returns must be filed and current. The IRS won't consider your application if you have missing or incomplete filings. Likewise, any bankruptcy petition must be resolved before you can proceed. Taxpayers in active bankruptcy proceedings are not eligible for an offer. Next, your individual income tax debt must meet the IRS threshold for an offer and compromise, which is usually based on your inability to pay the full amount owed within the collection period. If you owe taxes as a business owner, make sure all federal tax deposits are current. Additionally, taxpayers must have made any required estimated tax payments for the current tax year. For employers, payroll deposits should also be up to date. And don't forget, if you've received a tax filing extension, the IRS expects you to comply with that deadline before applying. Meeting these criteria is critical as it demonstrates your commitment to compliance while seeking relief. If you're unsure of your status, consulting with a tax professional can help clarify your eligibility and guide you through the process. Calculating your offer and compromise amount is key in the application process. Calculate your offer amount using Form 433A as your reference. This form helps figure the minimum amount the IRS may accept based on your reasonable collection potential. It considers your income, assets, and allowable expenses. If you qualify for periodic payments or installment payments, these will also be factored into your total. Now, if you can't pay the calculated minimum because of special circumstances, you can propose a lower amount. Be sure to explain these circumstances thoroughly on Form 656 and provide supporting documentation to strengthen your case. It's important to be specific and provide all the necessary information to convince the IRS to accept your offer. If the IRS reviews your offer and determines that it's insufficient and no special circumstances apply, you'll have the opportunity to adjust your offer to meet their requirements. This flexibility allows taxpayers to work toward a resolution, even if their initial calculation falls short. Understanding the payment requirements, how to properly calculate your offer, and how to accurately complete your forms can make a significant difference in the success of your claim. The IRS provides a structured process to follow regarding the payment of your offer and compromise. Let's break it down step by step. First, you'll need to submit the request forms along with all required documentation, including the current application fee and, if required, an initial payment. The forms for individuals and businesses have slightly different requirements. Individual taxpayers must complete Form 433A, OIC, while businesses must file Form 433B, OIC. Both forms need to be joined with Form 656, which outlines the details of your offer. Review the IRS instructions to confirm that you've included all the necessary information. You have two main options for making payments: a lump sum payment, where you pay the full offer or at least 20% upfront, with the application, or a periodic payment option, which allows you to spread your payments over time while continuing to pay during the review process. To send your forms and payments, use the IRS-designated mailing address provided in the Form 656 instructions, which varies depending on your location. Finally, Keep track of your selected installment payment agreement to ensure compliance with the periodic payment option requirements. By following these step-by-step instructions, you'll ensure that your offer in compromise is accurate and complete, moving you closer to resolving your tax obligations. Navigating the offer in compromise process can feel overwhelming, but with the right approach, you can increase your chances of success. First and foremost, it's important to understand the eligibility requirements to know how the IRS will evaluate your case. The IRS considers several factors, such as your ability to pay, equity in assets, current and future income, and necessary living expenses. They also evaluate the potential for exceptional circumstances. For example, if your income might decrease due to retirement or health issues. Understanding these requirements also means recognizing that the IRS will weigh what's in the state's best interest. That means they'll consider whether accepting your offer will ultimately benefit the government, either by recovering some of the taxes you owe or by closing your case efficiently. Keeping this in mind can help you tailor your offer in compromise to show how your offer aligns with these interests. Before submitting your offer in compromise application, gather all the necessary documentation and make sure every detail is accurate. Using tools such as the Offer in Compromise Pre-Qualifier tool can help you determine if you meet the initial criteria. Also, stay informed about the collection process. Even if you apply, the IRS may still pursue collection actions unless you meet certain requirements. For an optimal outcome, consulting with a tax professional can guide you through the complexities of the process, provide valuable insight into your financial situation, verify that your application is complete, and help you make a stronger case for an offer in compromise. Remember, this is a collaborative process. Presenting a reasonable and well-supported offer in compromise shows your commitment to resolving your tax issues in a way that works for both you and the IRS. We hope this video has been helpful. Make sure to subscribe to our channel as we continue to delve deeper into important tax-related subjects.